They say that it takes 7 years to rebuild your credit after bankruptcy, but that's not exactly true. In fact, if you follow this plan, you can rebuild your credit fast and get it done in less than a year. So keep watching because we're going to show you exactly what you need to do to fix your credit fast after filing for bankruptcy. Before we jump into this video, please make sure that you hit that subscribe button. And don't forget to leave us a comment down below. We love to hear from you guys. Also, we post new videos every single week. The first step is to understand that it does take time to repair your credit. Credit reporting agencies like Experian, TransUnion, and Equifax will keep a record of negative items such as late payments, charge-offs, bankruptcies, foreclosures, repossessions on your credit report for 7 to 10 years. However, there are ways to minimize the damage caused by these negative items and rebuild your credit faster. First, let's talk about the impact of a bankruptcy on your credit score. A bankruptcy will negatively impact your credit score because it shows lenders that you weren't able to manage your debt and repay your loans. This can make it difficult to get approved for new lines of credit and can result in higher interest rates and lower credit limits. But the good news is that a bankruptcy will fall off your credit report after 10 years. Another important thing to keep in mind is that different types of bankruptcies have different effects on your credit report. Chapter 7 bankruptcy is the most common type of bankruptcy and it will stay on your credit report for 10 years. However, a Chapter 13 bankruptcy will only stay on your credit report for 5 years. Now that we've covered the basics, let's jump into our first-step plan to repair your credit fast after filing for bankruptcy. Step No. 1. Check your credit report for errors. It's crucial to check your credit report for any errors or inaccuracies, especially after going through a bankruptcy. You want to make sure that all the information reported is correct and that there are no signs of identity theft or fraud. You can get a free copy of your credit report from each credit bureau annually at annualcreditreport.com. Once you have your credit reports in hand, you can start disputing any inaccurate information. This process involves contacting the credit bureau and providing evidence to support your claim. The credit bureau will then investigate and correct any errors they find. It's important to note that this process may take some time, so be patient and persistent. By disputing errors, you can improve the accuracy of your credit report and potentially increase your credit score. Step 2. Pay all your bills on time. One of the most important factors affecting your credit score is your payment history. After a bankruptcy, it's crucial to establish a track record of on-time payments. This can help lenders see that you're reliable and committed to paying back your debts. Start by setting up autopay or calendar reminders to ensure you never miss a payment. You can also contact your creditors and ask for a lower interest rate or waive fees, which can make it easier to make timely payments. Additionally, consider using a secured credit card or becoming an authorized user on someone else's credit card to help you build positive credit history. It is also wise to monitor your credit report regularly for any errors or negative items that may arise. By consistently paying your bills on time and taking these proactive steps, you can quickly rebuild your creditworthiness and improve your credit score after a bankruptcy. Step 3. Lower your credit utilization ratio. Your credit utilization ratio is the amount of credit you're using divided by the total amount of credit available to you. It's another crucial factor in determining your credit score. After a bankruptcy, your credit limits may be reduced, resulting in a higher credit utilization ratio. To lower your credit utilization ratio, focus on paying down your balances and increasing your credit limits. You can achieve this by making more than the minimum payments on your credit cards and asking for a credit limit increase from your card issuer. Additionally, consider using a balance transfer card to consolidate high interest rate balances onto a card with a lower introductory rate. You can also apply for a secured credit card or become an authorized user on someone else's credit card to help you establish a positive payment history and build your credit. By reducing your credit utilization ratio and taking these steps, you can improve your credit score and demonstrate to lenders that you are capable of managing your credit responsibly. Step 4. Don't apply for too much credit. When you apply for a new line of credit, a hard inquiry is performed on your credit report, which can temporarily lower your credit score. After a bankruptcy, it is important to limit the number of hard inquiries on your report to prevent further damage to your credit. Only apply for credit when necessary and group multiple credit applications together to reduce the number of hard inquiries. Additionally, consider the timing of your credit applications, as applying during a month when you know you'll receive a large deposit can help offset any negative impact on your credit score. You can also check your credit report regularly for any errors or negative items that may arise. By taking these precautions, you can protect your credit score and demonstrate to lenders that you are committed to rebuilding your credit responsibly after a bankruptcy. If you're looking for a detailed guide to help you rebuild your credit after bankruptcy, we recommend checking out our Ultimate Guide to Credit Repair. This comprehensive guide will provide you with valuable tips and strategies to repair your credit and improve your financial health. Simply click the link provided to access this informative guide and start your journey towards better credit. As you work on rebuilding your credit, it's essential to maintain a positive mindset and be patient. Rebuilding your credit takes time and effort, but it's achievable with commitment. Remember that every step you take, whether it's disputing errors, paying bills on time, lowering your credit utilization ratio, or avoiding too many credit applications, contributes to your progress. Stay focused on your goals and celebrate your achievements along the way. By adopting these positive habits and maintaining a positive mindset, you can successfully rebuild your credit and achieve your long-term financial objectives. But how long will it actually take to repair your credit? The timeline for repairing your credit after bankruptcy varies depending on several factors, including the severity of your credit damage, your commitment to following credit repair strategies, and the overall economy. On average, it can take anywhere from 6 months to 2 years to repair your credit. However, with dedication and patience, it's possible to make significant progress in a shorter time frame if you're proactive about disputing errors, paying bills on time, lowering your credit utilization ratio, and avoiding too many credit applications. You can potentially rebuild your credit faster. Additionally, working with a reputable credit repair company can provide you with expert guidance and support throughout the process. Remember that repairing your credit takes time and effort, but with a positive mindset and consistent action, you can achieve your credit goals and improve your financial well-being. We understand that dealing with the aftermath of bankruptcy can be challenging and emotionally draining. That's why we're here to help. Our team of experts has extensive experience in guiding individuals through the credit repair process, and we are committed to providing personalized support and practical solutions. We know that everyone's situation is unique, and we tailor our approach to meet your specific needs and goals. Whether you need help disputing errors on your credit report, developing a budget, or creating a debt management plan, we're here to guide you every step of the way. Our services are designed to be affordable and accessible, and we believe that everyone deserves a fresh start. Thank you for watching this video. We hope that you found it helpful and informative. If you have any questions or comments, please don't hesitate to leave them below. We love hearing from you guys, and we'll be sure to reply to any questions you may have. If you enjoyed this video, please hit the like button and share it with your friends and family. We'd really appreciate it. And if you haven't already, please subscribe to our channel. We post new videos every single week on a variety of topics, so there's always something new to learn. Thanks again for watching, and we'll see you in the next video.